Ladies and gentlemen of the crypto space, we're live on a Wednesday, August 14th at 11:33 a.m. Coming off the heels of a CPI report today, a federal United States federal CPI report, the federal data, the data everyone looks to, the bellwether, the almighty Federal Reserve CPI report. Oh, almighty Federal Reserve. What a load of shit. Everyone just looks to other people. They look to the government. They fix things. The whole point of this government created, literally, I'm digressing in the first couple of sentences. The whole point of this government created by the founding fathers was it's to not be government, it's to be delegated. And that's why federalism is so inherent in the structure of our government, because the federal government, the separation of powers is between the three branches, isn't just that, it's also the separation of powers between the federal government and the states. Why? Because of trust. And there's a separation of powers between the people and the local government. The people who, and between the local government in turn to the federal government. Regulatory authorities, executive. You know what matters actually? Uh, it's really the laws as written. And in that regard, I guess Congress is what to think of and to be most interested in. And I guess as much as it's become a Real Housewives, the people who elect these people in Congress, because clearly the general public loves their reality TV. So in many regards, our Congress is a reflection of that type of interest. And then we always think about how these people get elected. What is the impartiality of the process, the election process, and we have trust in that regard as well. But in any regard, the composition of Congress is what creates our laws as written. And man, I want to always, I want to think in terms of like the founding fathers and the laws as written and common law. It's so important and so meaningful. Sometimes I get worried that composition of Congress, the whole election process creates shit laws and all this bias and subjectivity and oh, I really want to believe that America is what they originally wanted it to be. Because I read some of these original documents and they're just breathtaking in language. Like literally the shit from the original Congress, the founding fathers, like the Federalist Papers, it was straight up scholarly. The the language is spectacular. Anyway, that is an entire digression. I'm looking at the dollar here. I don't mean to burden you with my burdens, but that is something I think about quite often. So the dollar's been weak, coming into what is seen as a down CPI, down a tick, a tenth. But you look at like trueflation at 1.49%. The whole conversation is always leading lagging indicators. The Fed's data looks lagging compared to this type of presentation, and the dollar reflects that. Everything is screaming, even the Fed governors, the almighty Fed governors, are saying we're restrictive right now relative to what the market says. I mean, look at the yield curve on inversion, look at rates and how they're moving, which means their Fed policy is restrictive, which means a whole lot considering our directionality. So bear in mind, we are directionally heading towards deflation. we're directly heading towards a cascade in commercial real estate and residential real estate. It's literally, look at the inventory. The inventory increase nationally, average, you have your isolated locales, but the point is supply demand imbalance. That's what causes change in price. So the inventory has increased significantly, which means there's not enough demand for housing considering the inventory, which also means the pricing will correct to create the demand, which means broad housing depreciation under unintervened path, which basically means if they don't do shit, our directionality persists. And I don't see, I see many things like, it's complicated, endless knock-on effects. Like, they don't want to keep housing prices inflated. What they want is stability. But they have to lower rates. And if they lower rates, demand will have a capacity to meet supply better because lower rates on mortgages may be interesting and palatable, but it's all heading towards increased debt load for the public and private sector. It just heads in a more perverted direction. Maybe we'll look back. I think about this often. Maybe we'll look back in 10, 20 years and the system is a magnitude more inflated. Instead of 34, 35, whatever debt we're at, we have 300, a half a quadrillion. And we're like, oh my God, we were so conservative back then. The same thing as if currently we look back on 80s and 90s and earlier. We were relatively conservative back then compared to where we are now. Pre-08, it was a whole different world with regard to the Federal Reserve balance sheet. So maybe we look back and this is all small potatoes. I guess all has to do with the function of the system. Does it remain functional? As the mandate of Treasury, smooth market function. They've been taking their laxatives over there in the Treasury. It needs to be a smooth move. Come on, Yellen. Got to get that fiber. 102,456 on the DXY. I note this relatively local trend. It's literally local in my terms. You got me looking at the monthly on the DXY, which is usually not something I look at, but it gives me a sense of what the hell's going on today. I'm much more interested in the bigger picture. But you get a trend breach, and we're finally heading towards the Goldilocks zone of the system, entering what I call the ketogenic phase. What does that mean? I've hinted at it. I've talked about it on Twitter, but X. But I really think like yen depreciation is the glucose phase. If we talk about the financial system in terms of physiology, but they're running on glucose, carbohydrates, yen depreciation, and you crash. You crash after you get rid of the carbohydrates. The glycogen exits your muscles, and takes a bit to get to ketosis, where your body's able to run on fats and whatnot. So that's an interesting metaphor, analogy, but I find that quite interesting. So if the yen stops finally depreciating and we get a cyclical reversal, that'd be quite interesting because that is what I would argue is the setup for a super cycle in many regards where things just get weird. Why? What does that mean, things weird? If you look at the DXY on the yearly chart, things getting weird is not a dollar bull market. And that is such a misunderstanding by such a large part of social media. Let me explain. There's your trend. So everyone's like the dollar's depreciating, the value of the dollar, the purchasing power of the dollar. But that means shit unless you understand how the system functions. So the currency is a relative game, and the value of the dollar internationally is literally appreciated. Greater purchasing power in many areas. many sectors. Just so it's just very short-sighted to say the value of the dollar has collapsed 99.9% over the last 100 years. But we have the greatest purchasing power dollar denominated in many commodities worldwide since the 70s. So it's just don't be myopic when you hear these stories like, oh, Bitcoin when the dollar fell. Yeah, yeah, you must have a time horizon looking for your grandkids or your children or when you're 80 or unknown. You just have an unknown time horizon. But it's so important to know what's going on now and how the system works now because now is important. You can live in the future. I live in the far future with regard to how I plan and prepare. But shit, there's a point where too far in the future is pretty crazy. Oh, XRP is going to take over the banking system. That'd be quite fascinating if it does. Uh, I think bank balance sheet composition is highly Federal Reserve regulated, and I'd be quite curious what that even means. So I think so much of the narrative expressed on social media is it's just a complete absence of fundamental understanding of the mechanics of the system. But look at this chart. Isn't this a fast? I love this chart so much. Why? Why do I love this chart so much? Because it tells us the world, local world, as in recent, as in 2008 to today. That's recent. I think sometimes I like to think in generational terms to really get perspective. Like early 1900s. But suffice it to say, we'll look at post 2008. So this is a world. These are separate worlds. Completely different living experience, completely different normalcy, completely different economic situation for each direction of this chart. Maybe we look at this chart on 3 years. Can you even zoom out the 3 year? I don't think you can. A 3 year chart. That would be interesting. Let me see if I could do that, just not right now. Suffice it to say, we've been in a dollar bull market since 2008. And we had, which could be a blow off top in 2022. And unless there's a continuation to the upside, that's the way technicals work. If next year it blows off to a higher high, 120, there you go. You still have a continuation of the bull market. But if you see a lower low, like for instance, you see a low that breaks trend, I don't know. I'm not going to draw a line. Maybe maybe I will. I don't know. Something like that breaks trend from a yearly perspective. If you get down to 80 something, that'd be a potential trend reversal, and then wait a couple of years to see if there's a continuation or a support flipped resistance. And then you got a potential downward lower low, lower high trend on the dollar relative to foreign currencies. And that's really a geopolitical game, a political posturing from governments, really an expression of United States interest, and really an expression of wanting to repatriate supply chain because you're not building shit in this country unless the dollar's weak. When the dollar's expensive, you buy it everywhere else. Everything else is cheap. When the dollar's cheap, people are buying from you because their currency is more powerful, has more purchasing power, and then they're wanting to export from us and import overseas. So that skews the incentive to manufacture domestically in the U.S. I absolutely love this chart because it tells the story of pretty much my adult life where I even thought about economics. Talking 2008, I graduated college in 06. So it's my adult life. In college, I was a kid. We're all kids. You don't think about anything. You're living in a bubble world. So this line right here, this little blip on a graph. It's an expression of a significant part of my entire life. I find that profound. This was my entire normalcy. And if we enter a world where the dollar is coming down, 83, 92, 75, 87, and then by 10 years from now, 34, we get a low at 66, uh, and then we start maybe a trend reversal up, because that's exactly what this chart indicates, technically speaking, structurally speaking, and I find that shit tantalizing. DXY, dollar depreciation, means yen appreciation, which means what fuels global expansion. So we've had a relatively supported market in 2024 in crypto terms because of yen depreciation. So I see that as like glucose and stuff. But that's yen depreciation as one currency. What is really like a ketogenic expression of economics is where your body's efficient and it's using its stored energy and it's really firing on all cylinders, efficient. That's really a matter of collateral. So dollar depreciation, collateral volatility collapses, and collateral starts to appreciate. And in that trifecta of technical confluence creates what I would call the ketogenic presentation for economics. That is the bull market of bull markets, of asset price inflation. And that asset price inflation is a manifestation of global currency supply expansion, which doesn't imply particular sectors. You got a lot of conditions in real estate. You need favorable interest rates. It could be quite restricted because of interest rates. I mean, higher highs and higher lows on interest rates, and you could have a relatively restricted real estate environment, both commercially and residentially, even in conditions globally of significant capital expansion. What does that mean? That means basically real estate has become less of an interesting investment category. Maybe technology continues to explode. It has been secularly for 2+ decades since .com. Maybe industrials are meaningful and not domestic U.S. manufacturing, which we don't have, relatively speaking, and maybe that becomes a significant investment. And real estate takes the back burner, and it becomes really what the hell it's supposed to be. It's not an investment. Never was supposed to be an investment. It's supposed to be you walk into Best Buy, you buy a phone because you want a phone. You buy a house because you want to live in the damn house. That's what the hell real estate's supposed to be. Maybe you buy a plot of land and it's actually affordable to, one, buy the land, and two, actually build your home. Oh, God forbid we actually weren't perverted and we were a normal society and actually did things reasonably and ethically for once. So higher interest rates kind of cures that, kind of cures the real estate perversion. Now the question is that the higher interest rates, how do we traverse the bubble collapse of a supply demand imbalance? There goes real estate prices, which I'm anyone who doesn't own a home looks forward to. Anyone who owns a home shouldn't have bought that shit for an investment, and that so maybe that's an ethical cleansing of sorts. I I have no ethical hesitation to see interest in a real estate price collapse. I think that would be good for people, um, good for buyers, not good for people that invested for purposes of appreciation and selling. I think that probably is the best thing for our society to actually see 70% reduction in housing, 50 to 70%. And people could actually afford it. Now the question gets even more complicated, as I said, countless knock-on effects, and because if the housing prices are coming down that much, can home builders actually build? What can they build with a sustainable business profit in mind? They have to actually charge an amount to to actually have a functional business. So that's why then you get bankruptcies or restructuring and the home builders, which and then that plays back into commodities. So if home builders are slowing TF down, then you got significantly less demand, a collapse in wood, lumber, and those supplies of materials, and then you get deflation there. So that would be an interesting one. I would find it very satisfying to see if the future has a real estate deflation, a massive real estate. Well, I don't give a shit. My house goes down or up. Oh, I just want to live. So if I bought it at a bit of a premium, certainly at a premium at this current price, it's like doubled since 2020, which is I don't think that's reasonable. I think that's good for people, especially our kids. I would love to see a real estate deflation, just honestly. And I expect to see a significant currency supply inflation, and I expect regulators to probably try and push that currency supply inflation into into economic or financial, the financial economy, as most appropriately called. You have the real economy and the financial economy. The real economy is the shit that people use to live, food and stores and groceries and supplies and materials and homes and real estate market. That's the real economy. Manufacturing, productivity, refining. Financial economy has nothing to do with the real economy. It's just the churn of excess capital. Um, so maybe we see P's and E's of disgusting numbers in the equities market over the next 20 years, and regulators somehow finagle a capacity to funnel all the capital expansion into just an insane inflation of the financial economy. I think that makes sense because with the financial economy inflating, fuck, just give everyone 100 shares of Apple when they're born. And now that's a different presentation of a of a social security, and it's like a pseudo socialistic program where social security is like, oh, they're going to do the investing for you, and just give them the damn shares, buy them the shares. I don't know. They'll never do anything that I say clearly, but these are interesting thoughts. Food for thought always. Move at 118, so we're not on the verge yet. This is a forward-looking indicator of the significant potential for capital expansion globally, and it hasn't rolled over yet. You need a big rollover, um, and we're not there. Let's go out to the monthly. Literally, this past week, we broke the time weighted average price to the upside again. I expect it to get hammered down. We're still on trend to some degree. Downward sloping time weighted average price. And look at the 50 SMA that's starting to roll. It'd be very comforting to see this come down more sharply, showing you how much lack of control they have over the system. But what do you need for this to come down? For this to come down, you need a significant increase in U.S. debt. So debt isn't what people think it is. How do you increase the liquidity in the market? How do you decrease volatility? By increasing the liquidity. So that's what everyone talks about in the crypto space when you're talking about LP depth and why are things volatile. If you got $10,000 in an LP and someone comes in and buys $1,000, bam, there goes the price. So how do you minimize price volatility? You significantly increase liquidity. So that is something Treasury does, and that's why they're doing those Treasury buybacks. So like $50 billion a week or something. So we're not there yet. Volatility reigns for the time being. Maybe we see a vol crush heading into the end of the year. And Lord knows what happens when they finally start cutting rates next month. 50 basis points. Does the entire market roll over? Do we have some sort of significant unwind because interest rate spreads significantly contract between whatever parties? We'll see. Anywho, Tapsy's in the house. Yo, what's up, y'all? Gazika. Greetings, Cap. Hope you're good. I'm okay. Everything's good over here. Sir Joe, present. Coin M. Potas. My man. Lake Meadows, peace. Lord of the Pine Cones, Morning Cap, can you name a few of your favorite macro followers on X and a brief summary of what they specialize in? Raul's big picture. Everyone loves to listen to Raul, but I prefer his macro takes more than crypto takes because I understand the crypto economy, but I look at very different things than he's interested in. So I appreciate those very high time frame charts, and when he talks about secular trends, I find that quite interesting. I don't listen to many macro folks nowadays because it's the same theme. It's like listening to me over and over again. At some point, you can't listen to the captain anymore because you understand it. So I understand these folks. I understand their arguments and their positioning. Um, Always like Luke Groman, Brent Johnson, Lynn Alden, um, Mike Howell, and George Gavin's always good introductory. Very good. Um, they all, what is macro? They all specialize in macro, which basically means understanding the structure of the system, the pressures that the system, the pressures that are exerted on the system, the knock-on effects in the system, what causes different things to unfold, how things work. What is money? How does it work? I mean, Lynn Alden literally talks about that. I talk about it maybe in a little bit different way, but it's very similar. We all telling the same story from a slightly different perspective. Um, it's probably my most favorite conversation. What is money? That's probably one of the grossly misunderstood uh, things in for the general public. It's just it's really it's a video game, and folks play the game, and really it comes back to the Matrix conversation. How if you're just using money and you're not even thinking about it, and you get a job and you're just playing by the rules, that's straight up blue pill. You're just oblivious to the reality of how the system works and who crafted the system. Who told you to work for $1? Why aren't you working for food? Or why aren't you working for housing? There's plenty of countries around the world where you're not just paid in currency, you're paid in housing and food and resources, and even have company cars in this country to a degree, but you get other types of compensation. Compensation, you're compensated in a currency. So a currency is a generic form of compensation because technically if you're compensated in a car or a house to live in, not to own, um, it's the same as if you're compensated in currency, just X amount of it. So let's say you're compensated in a rental house for that costs about $2,500 a month, you estimate, and your salary is $5,000 a month. Okay, so you're compensated in rental. So being compensated in currency is a generic form of these alternative types of compensation. That's the point of currency, is to standardize a capacity to transact in different denominations. And different denominations doesn't just imply foreign currencies, it also implies other stuff, technology and resources and food. It's a common denominator which makes financial activity smooth and seamless. Hope that helps. But um, you know, Real Vision has all the macro folks. Literally just YouTube. You don't even have to pay for it stuff nowadays. Everything that you possibly need to understand about the world is available on YouTube. And if it's one more, Real Vision's insane. The macro folks, not crypto folks. Ever want to understand crypto, you have to understand macro, because if there's a deflationary collapse and that's what they want, all this goes bye-bye, and that's okay. You need to restructure your mind to be like, none of this is supposed to be, but this is what they create. What is supposed to be? That you have food, and it's nice to have electricity for TV and all that content that gives us our way of relaxing and escaping, but not entitled. None of it's entitled. So none of this is real. It's all just a fabrication in a video game type of environment, all for us to remain civilized and not kill each other over food. So we're all just animals at the end of the day. I don't know. That was a decent argument. Hope it was clear. What are your convictions on Ethereum, both the asset and the network? How do you rank it in your system, considering it as the base layer for base layers? Ethereum is a gas token. You require Ethereum to execute transactions on many Ethereum denominated networks, EVM networks. Um, what I see in the future is potentially a lot of stablecoin gas token networks where you're swapping over USDC to some meta chain. It was a conduit. Conduits, there's no reason you can't have USDC as the gas token of a meta chain. So, but anything related to EVM, because all conduit's going to crank out is EVM meta chains, talking about Arbitrum and Optimism superchains. But it's interesting because you could use data availability from anywhere. I don't know. There's a lot of unknowns about the future. Omni chains and these super chains and chains of chains. I don't know. I don't know where it's all heading. I know very high level a couple of arguments like some point you won't know what chain you're operating on and it doesn't matter. So that's an interesting, uh, reasonable statement. I don't see it any other way to say that's what's in store for us. But EVM, I think the best expression or the best way to inspect and see what is the most important change is the amount of dollars. So do yourself a favor. Do yourself a favor. Go to DeFi Llama and go over to the overview of stablecoins. And simply put, these are economies. I'm in the US, you go to Britain, you go to Singapore, go to Australia, those are economies. Now, slightly different economy, a real economy versus a financial economy, but they're economies. So how do you inspect how well an economy is doing? Capital stickiness. How much currency is in a country? How much currency is in an economy? So if there's more currency, there's a reason there's more currency. Because currency goes where it's treated best, where there's opportunity. Capital moves from underperformance to outperformance, where things are appreciating and there's growth. So where you find the most dollars, status quo, you will find the most opportunity. And there's always outliers and complex conversations and narratives to consider, like Solana meme coins, which is really just a concentration of capital, a lot of insiders, some manipulation in many regards, and it's first come first serve. So it's put your capital in the pot and hope 50,000 people buy after you, and boom, $100 turns into $1,000,000. But that's just like that's not a macro inspection. That's not a structural systemic inspection. That's an isolated behavioral inspection of how people engage with these markets and utilize the products and services. And fundamentally, there's only three products and services in crypto: foreign exchange, credit, and derivatives. Everything else is some sort of gambling product, which is not necessarily a bad thing. Um, Lottery products, what do you think meme coins are? That's very consistent with a lottery type product. So, point being, where are the dollars? So the vast majority of dollars are on Ethereum mainnet, $80 billion. Tron's got a lot, but that is outside the scope of a decentralized finance conversation, unless something changes in the future, but is not the status quo. And that's it. It's mainnet, obviously Binance, Smart Chain, Arbitrum, and the popular L2s, but they're microscopic. They're less than 10%, mostly close to 5% the size of Ethereum mainnet. This is where the money is. When I say the money, I mean the big money, the money that matters. That's where they're making moves from. This is home base. So that's meaningful. Very meaningful. Hope that helps. If you're on X on YouTube, please ask some questions. More than happy to answer all of them before the end of the stream. Hannah, love the keto analogy. Hi, Hannah. Yeah, I like to think of analogies to better understand the world. Modeling, maybe, but that kind of makes sense for folks that understand a ketogenic physiological state. Um, there's a transition between a glucose metabolism and a ketogenic metabolism. And that transition isn't so fun. Some express flu-like symptoms, and they get lethargic and discomfort, maybe even nausea. Of course, nausea because you're going through uh, sugar withdrawal, glucose withdrawal, as the glycogen dries up in your muscle tissue. So, point being, um, glucose only goes so far. Glucose tends to be very spiky. I mean, obviously, you have long acting carbohydrates, but like a sugar is relatively short acting. So, like Japan. Japan that's like glucose, sugar, candy. And Euro maybe is like a carbohydrate, a little bit longer acting, a little bit more structural. And then you get rid of both of those and they start appreciating, in my opinion. You go through the deflationary impulse and then they got to get the financial system expanding again. And how do they do that? Is by suppressing collateral volatility and increasing collateral prices by adjusting interest rates and figuring out their geopolitical collusions necessary to finagle relative currency pricing. And there's your ketogenic financial diet. That is a good one, Hannah. Thank you. Good morning, Cap. DCA, man. Patrick. Hey, Cap. Missed the stream on Monday. So glad to get some live rationality this Wednesday. VE Curve. Payday is payday. We get, it clicks over today, but we get paid tomorrow? The payouts are tomorrow. I don't even remember because I'm so used to like Warden. Warden pays out lump sum everything, and that's all on Thursdays. Even though like all the V33s click over today. Get your votes in before 8 o'clock. Was it 7 o'clock for Velodrome Eastern time? Your votes in. Just relay that Velo. It's done. Set it forget. Get your Kingdom votes in. Make sure you get paid next week. Um, I mean, the whole title of the stream I forgot about. It was all about cash flow, the current environment. So maybe we'll circle back around to the title. Arrow, good morning. Corn potato, corn potas. I'll get that one day. The llamas are in the house. Athletic concept present. Happy payday. Love the cap. Always a pleasure, Mike. So the value of the dollar will depreciate and the yen value will appreciate because of that. Buying yen is a good move, or do I miss something? Well, cyclically, yes. So right now it's still incredibly cheap for pretty much anyone in Europe or anyone in the US to travel to Japan. It's a significant discount, but if the yen's appreciating, it becomes increasingly a premium. So yes, well that's literally what you just described. DCA, man, is isolated. Don't be myopic. Um, dollar's going to depreciate at some point, and foreign currencies appreciate. What you just described is forex, foreign exchange trading, and denominating your currency in different currencies from different countries. So that's what you are thinking in terms of. Of course, if the dollar is going to depreciate and the yen appreciates, you sell your dollars and you buy your yen, which is why directionality is everything, which is why this damn chart is insane. 12-month chart basically says dollar down, all foreign currencies up. Otherwise, the system doesn't really continue to work. So I have a lot of questions about an appreciating currency in other countries. Appreciating currency makes um, appreciating currency makes it invalidates domestic manufacturing. the whole world outsourced everything, especially the U.S. outsourced everything to China. But when you have a strengthening currency, it makes exporting more expensive. Interesting. This is how the structure of the system changes and how factories get abandoned overseas and get repatriated to the U.S., for example. Not as a newbie to my financial education, I'm so grateful for your commentary that helps me understand macro perspectives. It's a hell of a world, and certainly intimidating, certainly complicated, certainly it's a perverted system filled with all these interventions and counterparties and regulatory authorities and man, it's but Druckenmiller said it the best. It favors the person that understands how the system works. Because look at everyone afraid of macro, afraid of, oh, is the stock market going to crash? And then, there's a record amount of retail that owns stocks, but it's a perverted market. I mean, they would argue that the crypto market is perverted, but I would argue that the crypto market has completely crashed since 2022, whereas equity markets have just gone up, up, and up because they're structurally different, because they're integral to the societal stability of countries, whereas crypto is just this nascent financial economy. So understanding these macro phenomena tell us, all right, what goes down goes up, what goes up goes down, and it tells us what are the primitives, the significant financial products and services of the financial world, which is foreign exchange, credit, and derivatives. Oh, it just so happens they built them in crypto, and it just so happens that crypto will be used more in the future. And it just so happens that credit's fascinating because people that borrow pay interest. It just so happens I want that interest. It so happens that interest paid will be more in the future because as it's consumed more, they'll pay more interest. More and more people, more and more debt, and that's what a financial economy means to expand, which means buy a salary. and well, all I've done is for myself especially, and I try and tell the story as coherently as possible, is try and simplify the equation and try and understand it in the most simple terms possible. And FX, credit, derivatives, banking. I wanna own a bank. It's like imagine you're a kid going to like kindergarten. You're like, what do you want to do when you grow up? I want to own a bank, but I don't want that bank. I don't want to have any money. Just want to own the bank, and I'll let everyone else deposit and make money for me. I don't know, something like that. It sounds surreal. Why? Because nobody owns banks. Only it's a very isolated industry of insiders and ultra wealthy that owns banks, but can't own a bank if you have a couple hundred grand. Can't own a bank if you have a couple $1 million in wealth. Can't own these types of businesses. You could open a pizza shop, probably with like $500,000 loan and pretty nice, nice renovated pizza shop. You can't own a bank. You can't be an entrepreneur and start a bank, but it just so happens we are able to own banking business. And I find that not just fascinating, it's profound. You can't do that in a stock market, a stock. Oh, the almighty stock market, the equity where the white pasty board says, here you go, take your dividends. The dividends, oh. Here, peasant. Oh, may I have some more dividends, please? Oh my God. It's such a paltry, what's the word? It's a placation. It's like, here, motherfucker, here's your dividends. Now shut up and buy more stock. That's what dividends are. The board's getting a $30 million paycheck and they're giving you 3%, 5%, whatever the hell they're giving you. Then you get some cash flow based on performance. If the business is, you get pro rata ownership. So that's really what crypto is. It's pro rata cash flow. And or at least the things that we look at. That's profound. That's some deep shit. That's deep, philosophical. It's very deep. Hope that helps, Hannah. A pleasure. All right, W. Good morning, all. I am DC. Hey, Cap. My business rules are forming. It's taken me a while to get here. I'm finding comfort. Yes. That's it. Own things that pay you, and let time pass into the future. Owning more than one thing says that if one thing fails, you own other things. That's diversification. So all you need is some things to not fail and become used more into the future. And those some things are businesses, whether no matter how anyone describes them, because you could define them in your business rules, that I own a subsidiary. I have a business that I own, and it pays me, and that's a salary, and that changes everything. And the only other part of the equation is time. Time's going to pass whether someone wants it to or not. But the business rules allow you to find comfort to allow time to pass. Because your only measure of success with business rules, when write them down. 191 people listening to me right now. You have to write down your rules. Because your measure of success isn't total net worth. Your measure of success is how well you follow your rules. And if you follow your rules, and the rules are structured to be successful, like, all right, buy cash flow. Don't buy too much of it because you also need cash for other shit like food. But if you buy cash flow and you buy more of it, you're going to buy more cash flow, then more cash flow, then more cash flow. And at some point, you got cash flow that's the same amount as a salary from working. And you're like, oh, that's nice. That is a very simple rule to adhere to. So instead of buying some stupid stock and being like, oh, I hope other schmucks out there pump the stock, and I don't know what I'll sell it, and then I have money in a bank account. The whole thing about owning cash flow is it's something that's a little bit more digestible because everyone thinks in terms of cash flow, except they describe it in terms of work. You get a paycheck, so replace the paycheck. Buy the cash flow, buy the salary. So that's my reductionist presentation that that helps me understand a decent set of business rules. Hope that helps. Raul, a pleasure. Kazan in the house. Arrow, how do you balance being okay with the system collapsing but also preferring to permalock assets? Because if the system is going to deflate, there's two things that are to consider. One, cheaper prices. Okay, we have cash flow. Who gives a shit about net worth? That means nothing. What matters is if the cash flow is down, you're in a period of austerity. You have less cash flow. You spend less. Okay, make sure you're spending less than you make. Okay, it's part of your business rules. Cheaper prices means, all right, maybe there's something to acquire. Depressed prices and the deflating economic situation allows you to see opportunity because what you want is mispricing. You see something that's systemically significant, some sort of business operation that's meaningful that you can see growing into the future that pays you today and that will deterministically pay you into the future, maybe at a better price, you could acquire a reasonable position size. So, depreciating prices allow you to potentially meet your position size requirements. Define your position size in business rules. And that allows you to invalidate even thinking about many positions. If you cannot acquire an appropriate position size, it's not reasonable to even think of an investment. And then there's the other side, Arrow, which I'm tantalized with it. It's not the end of the world type scenario. It's the Immortan Joe thing I talk about. Mad Max. And um, in that scenario, the deflation collapse occurs, and God forbid investments, God forbid we work and we have to re-educate ourselves and learn a new trade. God forbid life's hard. God forbid it's life is like it was in the 40s and the 50s when you needed to work in a manufacturing facility. But fortunately, we have technology today, so you could do different types of labor and be productive in a different way. If that's the worst case scenario, um, I'm not really thinking about that much. It's what I'm doing today. I'm working today. I'm being productive today for my employer. I program. I'm a software engineer. There'll be software if there's a deflationary collapse. Okay. Pretty sure I have a capacity to be productive if there's a deflationary collapse. So you see, that's separate and apart from assets. That means the assets go bye-bye. So it's imperative. That's why I talk about my ownership in terms of purchase. So you have to reframe the concept of investing, and that is very explicit in my business rules. I think of this stuff, and you retrain your mind to really digest it emotionally. It's a purchase. So in a perfect world, your net worth means nothing, and what you're doing is on Thursday, Wednesday or Thursday, you're clicking a claim button. How much salary did you get? If the salary is going down, it's austerity. If the salary is going up, it's prosperity. And you don't look at DBank. You don't look at whatever the hell you're looking at to see how much money you have. That's all a red herring because that creates an emotional response and doesn't really mean much because you don't live on your net worth that does shit for you. What you live on is how much money you have on Friday. I want to go on a vacation. It's a $3,000 cruise. Do I have $3,000 in a checking account? No, I have $1,800 and I make $400 a week from work because maybe I'm young and I'm making $250 a week from businesses. So now you could say, okay, I have this kind of income, and what do I do with that $250 a week from businesses? Do I buy more income and I delay the cruise into the future, or do I spend it on the cruise? And these are the hard choices we have. And I would very much encourage anyone who's young to work first, play later. Purchase the salary now, and then play when the salary is larger. Anywho, I don't know if that was the best answer, but that was the best my brain could come up with. Hope that helps, my friend. If the Fed cuts rates, that furthers the yen carry trade unwind. Correct. You are correct. When folks were talking about the yen carry trade unwind on social media, there was no real spike in bond prices. I mean, I guess that's what the 118 is on the move. So you'll see it in the move. It's all about volatility. I mean, literally, if they cut rates and yen carry trade significantly unwinds and the Fed's buying, you need a buyer. Because if you have a buyer that matches sellers, you don't have the volatility spike. It's really all about this volatility. And I've discussed that in terms of AVE and how people think of collateral and credit. So you are understanding that correctly. Llama at Heart IW, DCA man, thank you, Cap. What he said, mix. Gillis, hi. I wonder if Noah sounds like he's speaking Chinese to Hannah. I did in the beginning. The more I listened, the more things made sense. Noah's perspective has been invaluable to me. Thank you very much. It's an honor, a privilege. And I know that I sound like Chinese to a lot of folks. And I apologize for that. The world's a complicated place, and this stuff is certainly complicated. Um, Look at my follower count on X. Look at the followers on YouTube. I speak Chinese. My wife always tells me to know your audience and speak to your audience, but I've only been able to speak the way I can speak. It's kind of like my mouth is a megaphone on my brain, and this is just the way my brain operates. I try and tell the analogies and the stories to give a little bit of context, a little bit of clarity and color. But anywho, I really hope that the things I say help. Um, very few people say the things that I say, and I know that because I never hear people say the things that I say the way I say them. But I guess that the same thing could be said for everyone individually, and everyone tells their own story, their own presentation of what their perception is of reality. So I don't want to sound Chinese, but there's nothing wrong with sounding Chinese. So maybe that wasn't. I don't want to be ethnically inconsiderate. So it's all Greek to me anyway. But hey, Cap, do you think the reduction in emissions for Curve, coupled with the likely influx of liquidity coming in the next 12 months, have a good chance of finally reversing the bleeding curve? My friend, I think Curve changes everything as a business, as a product. I think it's one of the most remarkable financial innovations that I could think of. It's a bank that you could buy the cash flow, and which offers FX, foreign exchange, and credit. And there's endless derivatives, endless. And it was the first to do it. This was the first to offer this type of product back in 2020. Um, since then, there's been a variety of other products. That's fine. But they were the first. And that's fascinating. I mean, it's literally a Bitcoin argument. You literally have that argument why Curve remains even though there's better tech. That's why Bitcoin still exists. It's the most trusted. So my portfolio, my business, my ownership is a significant percentage of Curve. Clearly, there's a lot of diversification, including my much interesting tapioca exposure as an early investor. Um, and I'm fond of the V33s. I'm fond of Aerodrome, Velodrome, Kingdom products. I still think there's potential for solidly, just not in a capital restricted market. We'll get to see more so the future of those protocols probably in 2028 because we need to go through the capital expansion and then see how they perform in the next deflation. Fun fact, fun fact, fun fact. But I think these businesses are going to prove very interesting in the future, near future. Credit's the biggest business on the planet, and foreign exchange is just as big. And that's what these banks do. And by banks, I mean crypto protocols. And by crypto protocols, I mean Curve, Aerodrome, Velodrome, Balancer, Aura, Convex, Aladdin products, Kingdom products, the V33 protocols, Ramses, Nile, Clio. This is big tech. Really think it's big tech. We're about to find out. Come back in a year and we will have an answer to if my opinion that it's big tech is true or not. Come back in 5 years and we'll see how really damn big these businesses are really destined to be. Can you please remind me of the narrative for Scroll? ZK, just zero knowledge proofs. What Linnea is. It's the same thing, except Linnea is from Consensus, which is basically Ethereum. I don't really know why Kingdom chose that, because it's boilerplate. the protocol is boilerplate. It's just rebranding, retheming, and deploying. Um, so that you could deploy it on every chain. If they, from a DevOps perspective, like a turnkey solution, you could write deployment scripts. And in theory, you could just deploy one of these protocols everywhere. Much harder to do cross-chain like what Velodrome's doing. So that's it. It's not like it was Scroll is the next big thing, and they're endorsing it by deploying on it. It's an opportunistic deployment, and that's okay, especially if it was a free airdrop. I'm not in a deflationary environment. You want to more concentrate more and not extend out on the risk curve onto the alt L2s or something. I think that's a decent statement. Alt L2s, alt L, I don't know. But now's the time to be patient. And probably if you have, I don't know, I don't want to talk about investing right now. Do you have an opinion on what folio value you think people should start thinking about income rather than trying to make multiples? No, that's not up to me. That's everyone must make that choice. But to help you with that choice, you need to get comfortable with calculations and documentation. First, write your business rules. Need Just write down anything that's on your mind about how you do things, why you do things, and then what happens is in 6 months' time, you're improving, you're making better, iterating, and then you'll have one hell of a document a year from now about your business rules, your methodology for operations. And it's all subjective, but as long as it's rigorous, be consistent, be not predictable because you want to have discretion, but you want to be consistent and not repetitive, but you want to be rigorous. It's a good word. Um, Listen, if you're in India and the last 10 years you saved up 10 grand and you get it at a good price and you catch it 20% on basis, run the calculations. That's 2 grand a year. 2 grand a year could change lives around the world. Couple $50 a month could change lives around the world because some people work for $50 a month. So if you have 10 years worth of savings and you own enough of an investment to make $50 a month, so it's all relative. What's pertinent is the calculations. And what's so much more pertinent is being rigorous, diligent, and document so you have a framework. Because then, and only then, will you find comfort in your decisions. And that's that whole feeling you have. You buy something and you want to rotate to something else because it's better. That's not comfort. That's doubt. You doubted your original purchase and you think something else will perform better. And that is something to cure. Food for thought. I get pushback when I suggest people slow down on the meme coin gambling. I don't know by who because I gambling. It's not. Some would argue, would state strongly against me that it's not a speculative endeavor. You know what it takes to launch a meme coin besides nowadays with Midjourney? Doesn't literally. Um, I mean, seriously, like to launch a meme coin, you go here and where is it? Cookbook Salary. Salary. So cookbook. 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 Show me the cookbook. Here, simple ERC20. Opening. Accept. Great. All right, cookbook, and then here's your token, name. So the constructor, this means when you create it, you got to pass these params. So you go over to deploy and run. You build transaction record. I've done this a bunch of times. You need to compile. Compile. You want to deploy environment. So no, you don't want the. Now you have to put in your parameters. Anyway, so this you put it here. Deploy name. Super super moon, and the symbol is SMN. All right, and total supply. Up, third parameter. Oh, this is a super deflationary, highly restricted meme coin of 10,000 supply that are ever going to exist. This is the total amount that's ever going to exist. 10,000. And basically, um, contract, fixed token, deploy. Nope, I don't want remix. I want to connect it to the browser. What is remix? Mainnet. I don't want Ethereum. Why can't I deploy to prod? Anyway, so the point is you deploy this. This is the contract. It's all in here. And here's your parameters. Here's a meme coin. And you connect it to mainnet. Mainnet fork? Why is it a VM? I want to connect to, used to be able to select wallet browser. Customize this list. And oh, here it is. Injected browser. Connect to remix. Deploy. Oh, cool. There you go. Confirm. Oh, you guys aren't seeing my pop-up. You're not seeing the Rabby pop-up, but it basically popped up to deploy this meme coin. That's it. So, and then you go on Midjourney. I think I'm sharing the window, so I don't have Midjourney. You go here in Midjourney and log in. Maybe I show the window. Authorize. Let's see if I could log in real quick. Maybe. Okay. And you go here to create. And here's my captain stuff. And a meme coin called Super Moon with tech future. Future technology. AR 16 by 9 style raw and a meme coin called Supermoon. All right, 10%. All right, we're making a meme coin here, ladies and gentlemen. 23%. We're 23% of our way to turn our 10,000 coin meme coin into $1 billion market cap. Force of nature. What else is in the commentary while this thing generates? All people want to do is 10x, 100x. They never care about long term. Yeah, well, I care about peace of mind. Peace of mind is everything. And all people doesn't have to be you. You could be who you want to be. Here's your super moon. Look at this coin. And now what you could do is stuff like very subtle, very strong. I don't want to upscale. I do this in Discord. It's makes much more sense. I want to prompt style, upscale, vary. Where's the select? Rerun, reframe, repaint, no. Share and save, prompt, style. Anywho, but you're able to select a region and, like replace this moon with a Bitcoin logo and then replace that Bitcoin logo with a variation, something creative, like a coin with a moon on it. You see where I'm going with it? This shit takes like 15 minutes to create a meme coin. And then you throw all that stuff on X, throw up a Discord server. It's like literally a half an hour to do all of this. So it's nothing. That's 5 seconds to make the meme coin. Anywho, last couple questions. Captain's got to get back to work. I believe you have knowledge of trust. Any view on RTL, revocable living trust? My opinion is irrevocable non-grantor trust. That is the strongest structure, in my opinion, from a family perspective, from a tax optimization standpoint perspective, that makes the most sense. Revocable living trust is you're a grantor, which means you're basically paying taxes on everything. So it's not optimized. And what's the point of a trust if it's not optimized? I mean, a revocable grantor trust is basically a will. Might as well run it all through personal accounts. I mean, it's still a trust, so running it through personal accounts means the accounting is pretty much the same, but at least in trust form, you have probate handled. So I don't see anything that's like that would say I don't I the biggest benefits of a trust are to avoid probate and separation of capital, and associated with separation of capital is tax optimizations. So without having all of those three benefits, I'm not too fond of a revocable living trust. I would say with sophistication, you could do so much more, as obviously we've talked about in previous content, and what we talk about on Discord and all the content I share on Discord. Hope that helps. It's a very long, complicated conversation dating back hundreds of years of precedents and legal cases. It's just a never-ending conversation. Hope that helps. Hannah, how do you determine reasonable position size? Okay, reasonable means if you make $1,000 at the end of the week and you got $500 in bills and you could save $500 and I want to get a new phone that costs $500. That's probably unreasonable. I'm giving the antithesis as an example. So reasonable is something that's like, all right, either I can't afford it, or I get a cheaper phone, or I'm just breaking this apart semantically. So reasonable is imperative to achieve. So how do you determine reasonable with regard to, all right, maybe that wasn't the best starting response, but position size, cognizant of the entire portfolio, if you have $50,000 invested across your portfolio and and you say to yourself, let's own 4 assets, 5 assets. So a reasonable position size is $10,000 per asset. All right, that's a decent statement. But that becomes unreasonable in regards because you just spent all your money. And a portfolio needs to have a little bit of liquid capital, albeit the cash flow will replenish the liquid capital. I don't have all the answers of how to do these things. Maybe the best statement I can make is that it's a good question. And we all have to answer that for ourselves. There you go. That's something I feel good in response. We all have to have all these questions, and it is our responsibility to ourselves to figure out how to answer them for ourselves. And we can talk about it, like what do you think is reasonable? How much capital have you allocated to investments? Uh, are you how's the budget? Are we spending less than we make? Or are we overextended and our mortgage payment's insane and stuff like that? What is reasonable? And that's just an open-ended conversation. It's always important to be reasonable. In trust law, they talk about strict prudent judgment and ascertainable standard. Prudent judgment of a fiduciary means rational, methodical, documented, rigorous, and consistent. There is no very simple answer to how to do that. It's a great question, and probably it should remain a question. Even if you yourself answer that question for yourself, it should remain a question. Is this still a reasonable position size? And that's the point of managing capital. Just never-ending unanswered questions, attempting to answer them. Hope that helps. DCA man, you are helping so much, Cap. It's true. It's true. It's true is hard at the beginning, but later when you understand so much value, if you are new and you're struggling, don't give up. With time, all become more clear. The most important thing is to not blow up your capital, and that's what meme coins do. So that's why I talk about XYZ. How much does it cost? How much is it paying? Okay, not necessarily relevant to this point. Z, how likely is it to continue paying into the future? Own things that are likely to survive. Own things that are structural and significant and entrenched. So identify the moat, identify the product and service offered, identify the consumers. Is it a B2B business? Is it a B2C business? Is it paying cash flow today, not speculatively in the future? And that's probably one of the most important things, because as cycles go on and the monetary system expands, you want to be part of that expansion. Anything that survives into a monetary expansion is going to financially inflate, or nominally inflate, to be more accurate. And that's what everyone talks about when the crypto market gets weird, that nominal inflation. This curve looking at decent buy price. So decent. These are the hardest choices we make. Can it be cheaper? Hard to say. Everyone's been liquidated, and it's been years of liquidation. It was cheaper. It was at 18 cents shortly ago, and that was after, who was it? Jump finally exited their last stuff. A forced seller. There was a forced seller. And it's up at what, 31 cents right about now? 30 cents. It's up almost 50%, over 50%. So hard to say. This is obviously a grossly misleading chart. Resistance. So it's a statement that could be made. If this is a structural reversal, then maybe there's support on the 50 SMA. So 27 cents. So this is a conversation of like technical analysis, Hannah, like where we are in the structure of the trend, which is why local technical analysis is respective of the global macroeconomic directionality. If we're on the threshold of rate cuts and Treasury getting a hold of bond market volatility and the capital expansion cycle, then this will lock in structural bottom. And then it's up from here. If there's a deflationary bust, then it's lower, cheaper prices. So this is why I often talk in terms of a purchase, not a position. So what do you want to own? And is it discounted relative to where it's been historically? So obviously, historically, it's significantly discounted. So that's a true statement. And is it likely to survive? Yes, that's a true statement. Does it pay cash today? Yes. Can it go up and down in price? Can it go down in price? Can it be cheaper? True and true. Um, so what I like to do is when you make a purchase, I like to state to myself, I own it. And if it depreciates from a purchase price, I own it, which is like a phrase, the catchphrase. Own it. Own your choices. Own your decisions and be proud of your decisions because that's all we do in life is make decisions and choices. So own it. It was a good choice. And in life, we'll make better choices and some much better, and we'll make bad choices. But that's like diversification and stuff like that. This asset's the core of my portfolio, and I think it's a reasonable choice, and I will only know the answer to my question of whether I made good choices in the future. And honestly, it takes years. I will only know if I made good choices in 2028. I need another 4 years, and then I listen in 2028. Curves at $20. And then in 2029, there's the deflationary bust of all time, and everything collapses, and Immortan Joe is our new ruler, and there is no financial economy. Did I make a good choice? I made a good choice for 4 years while there was a financial economy, and then all of a sudden, I probably should have invested in farmland or something. So I don't know. It's trying my best to tell a coherent story, but everything is changing always, and probably the most important thing to say always, you got to find peace of mind and comfort and owning things, and that's something I always remind myself of daily. Hope that helps. Buying SMN Supermoon right now. See, look at that. Just deploy. That's it. That's all it takes. There's your meme coin, and you do your graphics on Midjourney. So it's literally nothing. There's nothing to it. So to me, that's not something meaningful I want to buy. I want to buy a business. I want to be an adult about these things. Anyhow, DCA man. Last couple questions. We'll wrap it up for today. Meat Fish. Current market cap 350 mil. I'm not sure what their emissions are. But that's not horrible. Tap is 17 mil, so I see this as a better buy. Market cap relativity is not. It's complicated because look at Aerodrome. That's like 3 and change as well. But relative pricing on Aerodrome is not at its discount. So I use subjective quantitative data to say whether I could own something or not. Is it at the cheapest price it's ever been? Curve just bounced off the cheapest price it's ever been. Aerodrome, can I get it cheaper? Can I get the position size I want? I don't have the amount of capital I would need to get the position size I would want. 375 mil market cap. This thing is a big deal. And it's not understood, and I would love to have exposure to it. A lot of people in my community have exposure to Aerodrome. I just do not. What is a decent position size that I would consider? Problem is, it's at this relatively high market cap. I love to think of 0.1% to 1% of total supply, and then that would imply, 1% is 3.75 mil. 0.1% is 375 grand. I don't have that, but maybe that's irrelevant because 40% is 40% is 40%. So maybe I'm making a mistake. Or maybe I'm not because 40% is 40% is 40%. So it doesn't matter where it is. Capital onboards onto base, it's going to bleed over everywhere because capital flow cross-border is always about interest rate arbitrage. It's just people seeking out the best rate of return. Underperformance to outperformance is how capital flows. So maybe it's irrelevant. So what I like to remind myself of so much is to not burden myself with overcomplexifying things. Do I have free capital to buy it? No, end of story. If I had 200 grand and I'm trying to figure out what the hell to buy, do I carve out a piece for this? Maybe. I don't. So why would I even burden myself with hypothetical financial conditions that don't exist for myself at the moment? My curve has the Lindy effect, while currently TAP does not. Lindy is meaningful. That's why Bitcoin is Bitcoin. You cannot highlight this or understate. You cannot overstate this. It's easy to glance over the statement Lindy effect. It is significant. Lindiness is very significant because what we want is to own things that are more likely than less to exist into the future. And what Curve has been through is quite significant. And there's significant deposits, so it looks like it is quite likely to continue to exist into the future. Let's wrap it up for today, ladies and gentlemen. That was a good one. 209 people made it to the end of the stream. Thank you all for joining me on this Wednesday. Tell everyone to subscribe. I wish you all a good one. It is Wednesday, August 14, 12:59 p.m., and I will see you guys and gals Friday. Till then, peace.